All right, good afternoon, everybody. Welcome to the live stream, 17 December, Tuesday. Welcome to the live stream, YouTube, Patreon, you know the deal. We're going to begin right away here, folks, because we're kind of running late here, so we don't have time for the intro and all of that. So we'll give you here a minute to join us, please. I'm beginning to see folks joining us here, so please join us, and we'll begin right away. If you can see the picture of fun and everything good, let's go right here. Let's begin with the cues right away. So this is really interesting because we're supposed to close the gap here. We gave it a little bit of time to close the gap. I'd love to see 5 minutes or 15 minutes here. We'll look at different time frames. But this one didn't really close the gap in its entirety. That keeps two things as possibility. That if you're going to go short with puts right now, you have to be careful not to go with the entire position that you intend, because that's going to keep a question mark. It's not the end of the world. You know, we've seen gaps where we go down and then we flush down 20% before we come up and close the gap. So it's not something you want to be fixated in. It's actually a sign of weakness in the market that it couldn't really close the gap despite all of the pumping in these mega caps. But the important number here, notice we found support right at the low of the day. So here the low is 534.15, 534.13. Let's call it 534.10. Just to be a little conservative, let's call it 534.10. We'll see where we're going to close here, but if we close below, I think that's going to be a sign that we're probably going to head further to the downside, and we're going to close this gap right here, not this one right here. And again, you have another gap right here, so this could be, I mean, you could flush down and then next year or at a point of time you begin to close this gap, or maybe this gap, the wick is enough. The wicks that we got, we'll see. So I don't want to be too fixated in the gap, but I would look at the number 534.10. If we close below, I think we're going to go down here and at least tackle this gap right here. So 532, 530 will be the trade. If, let's say, we flush down, we open down tomorrow, we go to 530, we close this gap, we probably want to take the profits right away from before the FOMC. But like I said, this is just a speculative trade. You don't want to go too big because the real move happens in the aftermath of the FOMC. And the daily chart, again, you look at this, it's way too excessive on just the hands of few stocks. And I think, once again, if you look at probably the S&P shows it better. The S&P here, if you plug in the wedge pattern that we're looking at, I mean, you look at the weekly chart, we're probably going to flush down. I think we have a big flush here in the weekly. And you'll see the crossing back to negative momentum, which we've seen here a little bit under this consolidation. But we'll see another cross into negative momentum. And we'll be below 6,000. I mean, that's what I think is going to happen here, because if you look at the big caps, they've been moving higher as yields been going higher, right? So even if Powell, let's say, there was a lot of talk that Powell will probably give us a hawkish cut, meaning that, hey, I'm going to cut right now, but that's going to be it. And the bond market is going to read it as, oh, if you're going to stop cutting rates right now, you're going to cut them later, so let's drop yields down. If that is the case, it's going to open, like I said in the morning brief, folks, it's going to open the RSP for you to buy, the Dow Jones. I mean, look at all of these names are beginning to close these gaps right here. So, and they've been flushing down, getting hammered really big. I mean, the market been crashing, folks, in the month of December. You just haven't noticed it yet because the big caps. You'll see also value stocks getting absolutely smacked here, closing this gap right here. So we will see the comeback of these guys. The Dow Jones, of course, have been crashing. So look at this, continuous declines in the Dow Jones. So these are the guys that are going to lift up tomorrow. If that happens, I think it's going to be at the expense of the big caps. I think if he ends up lifting yields higher in a big way, we see an overall sell-off, because you see the RSP down, you see finally the big caps also flushing down. So this is my outlook. This is what I'm preparing for, and this is why I would say having a TLT put, for example, betting that yields are going to go higher, that's one way to do it. And then having maybe XHB calls, right? Because the XHB is a little oversold. So XHB yield sensitive. If yields go down, you probably want to pick up the XHB. So XHB calls, TLT puts. That's a balanced approach before the FOMC, and then we'll see what happens. We don't want to go too big here until we see what happens after the FOMC. Other important names, we talked about the SPY, we talked about the VIX, really important here. VIX is beginning to move, like we said here, the momentum is turning positive. and it's beginning to move higher. I think we're going to settle at 1760. I think that's worth retesting right here. And that could come as soon as tomorrow. And they're probably going to hedge, by the way, before the FOMC. So you'll see the VIX moving up right now, moving higher in the morning. So 1760 is something I'm eyeing. And if we break above, definitely we're going to close this gap. And the market is going to begin to flush a little bit. Of course, this is the most important name and just keeps getting pumped for no good reason at all. So we're awaiting a legitimate move higher in the VIX to get it to flush down. And I think we will. We will get one of those flushes, but again, timing is really different, or difficult, I should say, because you look at the daily chart. Any reversal candles? We got some here, maybe a little bit of a topping signal, but it worked out as a bull flag here. A little bit of topping signal worked out as a bull flag. So far, we don't have a reversal signal. We can speculate, and if you're going to speculate, use the butterfly put structure. That way, you're not overpaying if it continues to go higher. But once we get a crack with a bearish engulfing, we're going to go a little heavy here on Apple. If you look at the other big caps, Microsoft really quickly here, folks, that's stalling here at the range that we talked about. Really didn't pass that topping candle. And Google, of course, the one that has the potential to continue to go higher because it's not overbought. Also an inverse hammer today. So it's sort of topping signals, but not reversals. We're not seeing reversals showing up. Meta, same thing. If you look at NVIDIA, I think that's the danger if you're bearish in the stock market or you're betting that we're going to see corrective action in the index because it's been going down. Now it got a little oversold. And what I worry about is we take a bearish stance when the Qs and the big caps indeed go down, but then they pump NVIDIA higher by playing these games. So I would say if you take a shot against the Qs, maybe having some weekly NVIDIA calls would be sort of a hedge against that. So think about that as a hedge using NVIDIA. Of course, if it breaks down tomorrow, then we're probably going to follow the weekly chart, and the weekly chart has plenty of room to go. If you take the 20 weeks moving average, by the end of the week, you have plenty of room to go to the downside. Okay, so that's going to solidify. But what if we see, at least on Friday, some short covering here in NVIDIA, and then we see a sell-off in other stocks that have been going higher? So keep that NVIDIA as a hedge. AVGO, you're not going to short it right now, but I think we're going to close this gap right here at 225-ish. I think that's going to be closed. But the name is still too strong, so if it goes down here, it might come back up later on. So it's not something I'm going to be so fixated on. Of course, bear in mind, here's another example, right? Marvel, it gapped higher after earnings and rallied. Now it's flushing down big. So some of these gaps will close, at least here in the case of Marvel. But if you bet on closing this gap right here right away, it didn't work out. So you have to be careful here and wait for until all of this move to be finished. Because after an earnings pop, like we've seen in AVGO, you probably see something like this where it goes down, then maybe goes higher again, and then begins to take these gaps down and close them. So a little bit of patience here. I know a lot of people want to short it, but you have to be careful and disciplined. BTC. Anything to see here? We're above. Momentum is turning positive. The bullish side here has the upper hand for sure. Tesla. Topping candle today, perhaps. I mean, the hourly, we see some signs that, yes, it could be, but I think this name is going to require either an overall market sell-off. We see folks booking profits, and I think that's going to happen before the 20th because of options expiration. But the ultimate flush down in the stock will happen when the name reports, and that's not going to be all the way till February or late Jan. So I anticipate a pullback before the end of the week just because of options expiration in Tesla. Which means that maybe the butterfly structure will serve you better if you pick the expiration dates for next week. And then we double down, triple down, go really big as we hit the January with February expiration. I think that's the one I'm seeing here. If you look at the flows, it's the February expiration that they're targeting. So anyways, folks, these are my notes here for the major movements in the market. When you look here, look at the map, we're not seeing anything really moving. We've seen a little bit of encouraging action in healthcare coming back because of Pfizer giving us a guidance. But I mean, the rest of the market is getting creamed. And now even some of these chips and the big caps are joining. This is not a healthy market. And the sentiment is absolutely insane. I mean, you just go to Discord, go whatever you want to go. Social media, they're going in bananas, insane. So to me, that's a huge warning sign. We're not seeing the Chinese names really interesting. So you see Win, you see Las Vegas, you see Baba moving higher. D are also considered to be a Chinese name, and I suggested this in Discord. That maybe we're seeing sort of a bull flag pattern here, so that's worth exploring in deer. Problem is the options are really expensive. And why would we see the Chinese names going higher? I think maybe dollar pull back. We begin to see the market open up for other sectors that have been lagging. Here, I think the 450, 460, because there's no volume in otherwise. So if you want to open diagonally, there's no volume. So the only choice that you got is the 450, 460. You spend 340, you make 650, and that's as far as the best risk versus reward you're going to have. Otherwise, you can go next week, but again, see the volumes and the spreads are way too high, so might as well just go to the monthly. You can go to the 20th, but you're not going to find, again, volume is way too low, so that's the only trade I can find here. It has a pretty good chance of profit, by the way, so it's not a lousy trade either. Anyhow, let's see what you guys got here before we go. Bring it on, folks. Anything you got, please bring it on. This is your time. Let's see if what we have in Discord. Okay, so let's take this one. What would you do? What would you do to hedge NVIDIA if you're long NVDA via one sold put contract at the 120 strike, 1 year till expiration? Perhaps buy 2 contracts with April expiration at around 105. I'm just thinking that I'm just trying to think this could and get to read. Okay, let's try this again. I'm just trying to think this through and get a read on how your thought process works if you were in a trade like a long put. Thanks. Watch your video. If you're looking for a way to short chips, yep. NVIDIA is looking at the weakest, and it's been the laggard. Okay, NVIDIA's been the laggard, but right now NVIDIA is a little oversold in the daily, so it is a candidate for a rebound. Now, you say that you sold the put contract at the 120 strike. If you sold, then you have the obligation to buy at 120 if it goes below 120, right? So here's NVIDIA. Let's see what your risk is at 120. You're not even close, so you sold the 120 puts. But that's going to be, these guidelines, by the way, for the Bollinger Bands, because somebody asked me about this in the chat session. So let's get rid of this. Here we go. But right now, there is very little risk for the 120 to be crossed, let's say, by this week. But since you have it for the year, I think at that point, a year from now, NVIDIA is going to be below 120. That's what I would call it, because we're seeing topping patterns. I mean, even the weekly here. This is a classic topping pattern. We've seen a similar pattern here when the chart broke, right? It was also an impressive rally. But at the end of the day, the chart broke. So I think the chart will break below 120 in a year period for sure. How do you hedge against that? I mean, do you really want to be long NVIDIA when the show is already over? So maybe at some point you want to book profits from that trade rather than try to hedge, because that's, crossing below 120 is something that's going to happen inevitably, but not in the immediate future. So you're okay right now, but at some point you need to think about it. What is your profit goal in this trade? Like if my profit is, I sold it for a certain price and now I can capture some of the premium, I would do that. Yeah. But anyways, and mind you, every time the video goes down, it costs you more to buy it back, right? So maybe you want to consider this rebound, if we get it, as an opportunity to exit that position. And then if you want to be long the video, you can do other strategies, by the way. You can buy a call, you can buy a call spread, you can do a lot of things besides a put, which is selling a put, which could be a little bit dangerous if you don't have a hedge against it, such as buying another put below, which kind of defies the purpose of the trade of raising cash. Anyways, handsome. The Dixie bounced off the 9 on the daily and has some bullish momentum behind it. If we look at the Dixie, yes, I'm with you, but the dollar right now is just consolidating here in this pattern, and there is possibility it could split and come back down in momentum. It could break, of course, and if that happens, of course, the confirmation is right here. But you never know. Maybe Powell is going to say something hawkish and spike the dollar higher, and I think if that happens, we'll see massacre in the dollar-sensitive stuff. The metals will get crushed. I mean, look at the XME. It's been painful. It's been absolutely painful in the metals. It's oversold, and this is why I'm suggesting that maybe what's going to happen is he drops the dollar on bond yields because the market reads it as, because the market is a baby. Then the market is going to read it as, okay, when he was cutting rates, he was risking inflation. If he's now going to begin to say that this is the last cut, maybe he's going to risk missing out on the recession risk. And we see yields going down. And if that is the case, you'll see a big pop in metals. So, in other words, you have to think about the FOMC in two outcomes. What if he drops the dollar on bond yields? Then you probably want to buy calls on these guys, right? XME, XHB, the stuff that got hammered, the Dow, and that's going to be your play. What if he pushes yields higher because he says something about inflation or whatever, and we see yields going higher? If that is the case, then you probably want to be short TLT, right? So you're going to have a play both ways in both scenarios. And the play should be for the end of the week, December 20th, we'll see more action. So think about this in these kind of terms. In positioning, I would say calls on the XME, calls or XHB, even the IWM would do the job, but I don't think the IWM suffered enough or is oversold enough to be such an attractive play in yields. Let's say if they go down, we see these assets rebounding and dollar go down. So play both scenarios, small, and the goal is that we're going to see excessive move up or down on both scenarios, either yields spiking or yields and the dollar going down. You see a move in these assets. So we want to have exposure both ways. Good morning. I'm shitting bricks with this Apple play. If Apple gets back to 246, I'll be in profit again, but damn. Okay, so this is the strangle situation that you're in. It's strangling you right now. Look, we're above where you should cut your loss. Okay, so technically you should cut, but as I said before, the moment you cut, it's probably going to go down. So what am I saying here? Just eat the loss? Look, I leave that decision up to you because you can always exit right now, cut the loss. If you get a confirmation tomorrow, you can get back in the trade again. Or you can, for example, give it a chance till the FOMC. If the FOMC doesn't do the job and spike the VIX enough to drop Apple down, then okay, you have your answer here that we're done with the last catalyst of the year and nothing happened. So you probably want to abandon the trade at that point, although it's going to lose more premium. So it's a tricky decision. When you get the trade right here, topping candle doesn't work out, technically you cut the trade. But with this excessiveness here, the risk of a disappointment and a flush candle is also highly likely. And like you said, all you need is just to drop to the 240s and you'll be back in the money again. I can't really help you with that decision. You have to assess your own risk. And again, always remember this. You can exit the position and come back later again. You're not going to abandon it and just leave it. You might have to pay more to get it back. That's what happens when we abandon things and not appreciate them. Then we want them back. You have to pay a little more. That's the nature of the game. But here, if you decide to cut, let's say tomorrow the FOMC gives you the confirmation, we're back below the highs here and the number is 250.80. You probably want to enter those puts again or restructure a new trade where you sell another call and then you have a strangle that is a little different weighted. Okay, so you buy the calls with a lesser quantity than the puts. You can still have that kind of strangle trade. Okay. Mav, I bought the KRE and the IHF before the Fed meeting. I saw the trend and went for it. Now, my take is that the Fed cannot avoid a recession. So you bought puts in the KRE, and I think you did pretty good today, right? KRE, I was anticipating a rebound. It didn't happen. It flushed right away along with the XLF2. So we see here Wells Fargo holding pretty good. So the big banks are holding pretty good, but the regionals is where we see the weakness. So maybe you're onto something. I don't like how tight the bands are, but again, you have this gap, and we could just have one flush to finish it and close the gap right away. So you could be onto something here. Of course, what will upset the KRE? Yields going higher. So that's another risk. What happens if yields go down? So you need a hedge against that position, which could be if yields go down, you probably want to buy calls in the XME, XHB, Dow Chemicals. Any of these dollar-sensitive or yield-sensitive names will do the job. Just have a hedge to accompany your KRE puts. And you have the IHF puts also. So IHF, the healthcare. Look, this is also excessive because you have, we know what's going on with UNH, obviously. UNH continues to bleed, but remember, you have the expiration date of the 20th. A lot of puts are in the money. What do you think the market maker is going to do? going to reward all these puts. They already did the inverse gamma squeeze their account for buying all of those puts. They probably want to punish the Johnny come ladies of the puts and move it higher. So let's say you have puts in January for the IHF or February. I think you should buy UNH calls for this week, for Friday, just as a hedge. Okay, why is the VIX climbing higher, but there seems to be no response with SPY? Is it due to the weight of Apple and AVGO? Exactly, Leo. Exactly. So the VIX moving. I mean, look at this. When people say there's nothing going on, look at this. The Dow and the rest of the market is getting creamed. Right? The Dow lost about 4% of value in just a few days. So yeah, the VIX is going higher, but we have other names that continues to hold. Apple, namely Apple. So the VIX is moving higher. You're not seeing a proper response. You're seeing a little bit here in the SPY, not so much in the Qs. And the reason is you have Apple moving higher, and that's going to keep things afloat. And AVGO now, and you have Tesla also weighs pretty big in the NASDAQ. So if you keep these names fluffed up, and we're not going to see sellers here, the indices hold, despite the VIX, which is, again, not going to sustain because at some point these guys will be forced to sell because the market maker has to do a move by the 20th. And think about all of the calls that are in Tesla, for example, they're in the money. Do we think that the market maker is going to reward the 500 and the 520 and either buying even the 600? Do you think the market maker is going to reward all of that? No. They probably want to trim some of these right here, say, you know what, all of you came late, let's drop it down and make sure that you guys lose. So there is a move coming here. Not just the FOMC, but the OPEX will be important. Mav, UAL and the RCL trades. So if you took trades against transportations, UAL is a little too tough here to break, but getting close. So if you look at the weekly chart, that's what matters here. The weekly chart, you got a topping candle. You got almost a confirmation depending on the close this week. If we close in the red, it's going to be a confirmation. And I think, again, it's going to be a quick flush to the below 80. So you want to stick with this one here. RSL, same thing. All of transportation will act and react the same way. So here I have a bearish engulfing candle. So the outlook doesn't change at all. I know we have a little bit of a pop higher today here, but it doesn't change a lot. I think if the transportation go down, RSL will also come back and close this gap at least. So you have a lot of options here. Between now and the 200, you have a lot of options in how to structure a trade. But you have to have a proper expiration date. I think January will be sufficient enough. Mav, we had a little wake up in Nat Gas, ready to pump a little more. Nat Gas been a little lagging in the beginning of the week, but we got back on our feet today. So think about what we talked about in Kotara. That went down a little too much, I think. And if it closes the week above 24.73, you're back on track on this higher low pattern. EQT also been holding pretty good, but of course you want to go with UNG just to play the commodity for now, because the stocks will take a little time to respond and reflect the move. So right now it's UNG, and I see this move here on the MACD indicator is encouraging, right? It's firming up. It's firming its way higher. So I think we go with the UNG or even Boyle. If you want to go with short-term contracts in Boyle, that will be okay. But Boyle should not be held more than 2 weeks. So here I think that we have a move higher. I'd rather go with the UNG to be honest with you. But yeah, it looks like natural gas is back on track. Hey, Mav, are you still building a palladium position? Yes, but again, look, this is going to be painful if the dollar doesn't respond. And I think the dollar will. So we have an important day tomorrow. And if the dollar begins to move down, we'll see palladium lifting out. And again, look, I'm building a position for palladium because of this. Okay, I'm not building a position for palladium for tomorrow or any of that. I'm building a position for this where the market was going down. If you look at palladium futures, they're probably going to show it. So we go back. See here when equities were getting crushed, right? This is 2008, right? The Lehman crash. Palladium went higher by 200%. So let's say that you bought it here when the dollar was firming up and all of that, and you went down, let's say 20-30%. Your entry was not really proper. Look at what you made later on. So this is how I look at palladium. It's not something I'm looking to hold for today, tomorrow, it's something to build for an eventual outcome. And palladium is really, really sensitive to the dollar. So I think if the dollar indeed goes down because we have a problem in the economy, and that's going to happen next year, with the policies, I think the palladium will be a good pick. But it could be a little bit painful between now and then. Does the market maker directly affect individual stocks on OPEX too? I thought it was just the indices. It's mostly the indices, but if there was a stock like Tesla, like Nvidia that went way too high or got crushed in an aggressive way, like UNH, yeah, things will happen in the individual stocks too, because a lot of money was allocated to these trades. It affects the individual stocks too. So if you look here, hello Maverick, do you think SOUN is finally ready? I don't want to be fixated on these guys, by the way, because they still have a lot of momentum with retail investors coming out at the end of the year. So this one, I mean, here, it gave us a topping signal, but a mediocre pullback. Here, it's showing signs of stalling, but it's not giving us any reversal yet. So in this one, you have to be a little patient, because you enter right now, then they chop your head off tomorrow by another pop higher. You don't want to be in that position. So keep an eye on it. This is one of those charts that if you enter short on it, you'll be fine later on. But as far as the puts, you have to be a little careful. You need to see something. Let's look back at the chart's history here. So you see topping candle coming back. It does this ABC. When it breaks out, it does this ABC kind of pattern. But you see here, that's a topping candle. Then you had the breakdown confirmation. This is a bear flag, and it did break down. After that, you've seen a series of declines. So this could be the same situation here where we do an ABC, and then in time, we do a topping candle, and we begin to head down after that. So you don't have to rush right now to enter that position. Okay, I got ExxonMobil 120 calls for February 21. Does it make sense to add more, perhaps longer expiration? I don't want to add more because, I mean, I have a position not at 110, so you are at a better place. I'm at 115, 113. So right now we're seeing signs. I mean, it is way oversold. So again, look at this. One of the most oversold readings that we've seen in ExxonMobil's daily chart history. But if we see the dollar going down, that's a huge possibility depending on how the bond market reads it, right? The bond market reads it as, oh, let's drop the dollar down because of recession risk. And I think that's, you know, for folks who are betting on reinflation, you need to see that happening. You need to see the dollar going down before you see commodities moving higher. So again, if the dollar goes down, I think Exxon will be one of those trades that are appreciating value. A 110 could be hit as soon as the end of the week if the dollar goes down. So think about the positions that a lot of folks talked about with betting on the dollar going higher and betting that yields will go higher, right? And you're betting on the KRE to go down, for example, or you're betting on the RWM to go down. You can complement the trade by buying Exxon calls. That way, if the dollar and bond yields go down instead, you have something to play in that direction. So think about these kind of plays, folks, if you're going to play the FOMC. Yup. The ticker PAL following Palladium futures. Yes. So Palladium futures, PA, if you want to trade those. PALL, this is the cash index. It tracks Palladium with the degree of certainty and reliability. So Palladium futures are way too expensive. So I like to use this one to hold Palladium. Thoughts on Regeneron? Regeneron got hammered recently, but today's coming back up again. Look, Regeneron again, if you're going to play calls, I suggest you find another ticker, right? Because with calls, you need something that's higher beta, that's going to move quickly. Because the decay here will kill your calls really quickly with lack of volume in trading this name in options. This is more if somebody wants to accumulate a position in Regeneron. That it went way too far in a short amount of time for no good reason. It's going to come back and at least close this gap right here. So if you're a stockholder, I would hold into Regeneron. Maybe you're seeing sort of a mini kind of falling wedge breakout here, and Regeneron continues to go higher from this point on. But if you have the calls, it's going to be challenging. I'd rather have something else to play calls on. Okay, Citibank and JPM, Jan 17 puts looking to fill the gap below. In C and JPM, got to be careful because you have redundancies here. C and JPM will trade the same way, so you don't need both of them. You need to pick one of them. Citi been surprisingly strong, and of course there's a gap right here, but if yields go higher in a big way, if yields drop down in a big way, it's going to hurt them. So I look at the weekly chart, I'm not seeing quite a reversal yet. You see the momentum remains bullish. Not seeing any signs here. Let's check out on JPM. That could be more sensitive to yields going down tomorrow because a lot of their income is coming from interest. So here, you're closer to that reversal. You have no confirmation yet. It's 235. If you close below that for the week, you're probably going to head down. And your gap would be the election gap right here, which I think we're going to close. So Jan will make sense, but pick one of these two, right? JPM or Citibank. If it was my trade, I'll pick JPM because it's more sensitive to yields. And the options are widely traded and better priced than Citibank. Let's look at the market here really fast because we got about 10 minutes. Here's the 3 minutes. We haven't broken below the important number, so we're holding here. A little bit of weakness. You don't want to be sucked into it in a big way. Just note it. The market is beginning to show a sign at the top. Confirmation comes tomorrow with the FOMC. SPY. Close below 604 would be beautiful because in the hourly chart here, it will solidify that we had a triple top. And we're probably going to head down to 598, or let's call it 600 tomorrow. And we begin to correct a little bit. And I think this gap is also will be challenged next year. So think about everybody who bought since November. They're probably going to be underwater when we open the new year. But I think that between in December 20th and the FOMC, if we have a pullback, it'll probably be in the range of here, 595, maybe 591. But I don't think we go down and close the gap. Unless it's really aggressive, that'd be surprising to me. But again, the market does not look good, folks, despite the sentiment that you see. Here's the VIX, pulling back a little bit, but coming back up at the end of the day. VXX, short-term futures. Let's look at the daily chart. Remember what we talked about, right? When I said that here, you're beginning to see signs of life in the VXX. Bullish crossing, bullish divergences, and I think we see a big pop here to challenge some of these highs. So this is one way, this is one of the occasions where I would say, yeah, it's okay to buy calls in the VXX. Although I'm not a fan of trading the VIX via these proxies. Here's the Qs. Anything J. Powell could do or say to make the market go higher? Well, look, J. Powell can drop the dollar down or bond yields down. The problem is it doesn't seem that he understands the mechanics of the bond market. But let's say that the market reads them that way. The dollar goes down, yields go down. The market will go higher. But when I say the market, it's the dollar and bond yields market. It's the Dow, it's the equal weight, it's the value stuff. But maybe the indices will go down because now you have an alternative. You have a rotational trade. Yields are coming down. The DIX is going down. You don't have to be stuck to the big caps anymore. So we see money coming out, rotating those sectors. We see the phenomenon of the indices down, but the breadth actually pretty good. So that could be an outcome. This is one of the plausible outcomes tomorrow. I think we only see as an inclusive sell-off if we see yields surging in a big way. What could be an ExxonMobil Lotto trade? So ExxonMobil, if tomorrow we see a move higher or move lower rather in the dollar, you probably don't want to go too much. So you're probably going to challenge the high of this candle here. So 110 is as far as I'm going to go. So you go ExxonMobil, the 20th. If we pick 110, that's going to cost you about 38. It requires 2%. So that's a possibility, right? But you probably want to make more money than that, right? You need to see it up 4 or 5%. Maybe that's not going to happen. So if we go a little to 190 to 109, that costs you about 66. So again, the question is it worth it to go to next week and go with 110 for next week? Because the 109 will cost you 66 here. For the 27th, you can take the 110, and it cost you a little bit 91, and you have a little more time. So, but if I'm going to do it for this week, it's probably going to be the 110. Because that's the definition of a lotto. 40 cents, lower chance of profit, but if indeed we see a big pop of 3%, we'll make 300, 400%. So yeah, that's the definition of a lotto here in Exxon. Okay, just so this in the morning, fund managers are 14% underweight cash according to the latest Bank of America survey. The lowest level on record. Yeah, because they're all chasing right now. Right, so they're going to have to raise cash. And again, the yields are going higher. So folks, 25 will be really interesting. Okay. I know a lot of folks now get sucked into this action. But 25 will bring something different because we priced in pretty much all of the good news from the Trump presidency in about a month or so. And we don't have a lot of juice left to squeeze here. But the cash is going here, right? The cash is chasing the passive investment bubble just to chase into the year performance for the portfolio managers. But then comes Jan. They have to reposition and allocate a proper positioning for cash. That should be, by the way, in around 20 to 25%. So they have a little bit of selling to do to raise some cash. Okay, we'll continue to monitor here the Qs, see what's going on. Qs still holding. Mav, is Dow a good ad here? Randy, Dow is not a good ad until we see the dollar coming down, right? So it could be a trade for tomorrow, right? It's absolutely creamed, and I think that's way undervalued for a stock that's producing still good returns, and the dividend is under jeopardy if the stock continues to go down, but I think that it will stabilize, and you might lock in a really generous dividend here. But what I would do is just, if I'm, let's say, short the IWM, short the KRE, short the SPY, betting that yields are going to go down, or the dollar is going to go down, then I probably want to buy a hedge of calls in DOW, because that's going to be one of those names that if the dollar goes down, you'll see a big pop higher. So notice here, November 21st all the way to the 25th, right? We've seen a little bit of rally here in Dow, and that was worth, by the way, about 5 to 6%. So it wasn't a small rally. So notice these dates, 20 to 25. Now look at the dollar, and you see here, during the 20 and 25, we've seen the dollar weakening. So it is really sensitive to the dollar, these chemicals, and also sensitive to China news. If you have good news about China, you see Dow going higher. So now that we see the Chinese names, look at BABA, for example, today, it is outperforming, right? So there are good signs, but I would stick to the calls. I would not allocate positions right now using shares, because if it continues to go down, it could be more painful. As the weekly chart is oversold, sure, but I would stick to the calls here, folks. Just buy some calls as a hedge. But if you have the XME calls, if you have TLT puts, you're probably doing a little bit of redundancy. Any real chance that Jay Powell pauses? CME Fed Watch says it's 5%, but everywhere I look, it seems to be 0%. No, there's no chance to pause, because the Federal Reserve doesn't like to surprise the market like this. There's no point to come at the end of the year and shake off the market and cause volatility. He's not going to do that. And he thinks that he can manage. If he can cut right now, he can pause and then allow things to tighten a little bit. So he's going to cut, that's for sure. Question is, he's going to cut and then announce it. He's not going to announce it, but he's going to hint for a pause. And the market reception of that will be really interesting. Do we push yields higher because he's not cutting anymore, which seems to be the traditional way to look at it? If you look at the 30-year bond yield, for example, or most importantly, I mean, tomorrow the SHI will be more important than the TLT, really. So do we see the 2-year going higher, but then we see the 30-year, the 10-year going down? That could be one scenario. Or do we see yields responding negatively, where they actually go down because they think, oh, pal, now you're increasing the recession risk by thinking about a pause? It's going to be tricky. And we're going to discuss these scenarios tonight just for you to know. But at the end of the day, there's no point of positioning in many different scenarios when you have at least 4 of them. You need just to position on the 2 outcomes, which is if you have, again, puts in the TLT, that's a protection of yields going higher. And then you have calls in the XHP, that's a protection of yields going down. I think that's sufficient enough. That's all you need. And then we can expand on that tomorrow. Looking back at the Qs here, folks. Still stalled, didn't do anything at all. Let's look at the hourly, see how it's shaping up. You could argue that this is sort of a bear flag pattern, but again, the patterns didn't matter because you have to look at the individual patterns. An Apple still in a bull flag, right? AVGO, that's just pulling back here, but I mean, it could be bear flag and AVGO, close this gap, but then what? Like still not enough damage to reverse the trend. And then you have NVIDIA, which is threatening at least to find some footing here. So it could find some footing, right? It's oversold. And then you have names like Microsoft, still not showing enough weakness or reversal, still consolidating here at the previous high. So while the index might give you one look, you have to dig underneath and look at these big caps. They have to go down together, right? You have to go down. You can't have one name up 3-4% and then have the indices go down. They need to go down together before we shoot against the indices, which I think we're getting really, really close. I'm raising some cash for it. Anyways, folks, VIX holding up here. SPY beginning to find some footing here as the VIX pulls back a little bit. So there is a degree of sensitivity, right? When it flushed down when the VIX was going higher, now it's coming back up. So there is sensitivity to the VIX. Bronco, Mav, I miss things in the chat sometimes. Do you ever toss out any NVIDIA ideas? Did you toss? We did one before. I mean, we still have the lotto, by the way, the 135. 125 puts. That's in the money right now. So if we close below 135, I want to exercise the 135 and short NVIDIA at that point. I already got back, but I would rather do things your way. You tell me what you think right now, and then I'll tell you what I did if you want to know. Okay, so what is your time horizon, though? Because NVIDIA on the daily, I'm thinking that NVIDIA is a little oversold in the daily, might catch a little bit of a rebound, right? And they might do the cute game of dropping Apple, then pushing NVIDIA higher again. So when you see these touches in lower bands and you see candles like this, right, you're probably, you're going to go down, right? Maybe you form a lower high and go down eventually, but the entry is not ideal right here. So you have to be careful. If you didn't take it here, let's say last week, you're probably a little too late here. You need to see NVIDIA continuing to go down in an aggressive fashion and the VIX moving aggressively higher. If that is the case, then I would say, okay, we're playing the weekly chart. The daily Bollinger Bands is not going to matter. It's just going to expand. And now we can aim for the lower bands here at the 104, 105. So one step at a time, but the entry is not ideal at this look right here. Good. We have a good number of people joining us right now, folks. It's a good number. Here's the shy, which will be important tomorrow. Right now, the shy, if we look at the weekly chart, it looks down. It looks like it might break down, right? If it does, that means the 2 goes higher because the Fed is stopping cutting rates. So I think we'll discuss this in the show tonight. What if the 2 goes higher, the 10 to the 30 go down? That's really important. And we'll discuss all the trades, the appropriate trades for these scenarios. Mehmet, hey, Mav, idea about opening new puts on UAL for Jan 17. You can, right? You can, but you have to be really careful with it. You don't want to go all in with remember we talked about the increments, right? So you're not quite at the confirmation yet, which is 95. Let's call it just 95 even. You're below, touching 95 exactly. So I would enter right now. Sure, I would enter maybe the 90 or the 85. Just don't go below 80, right? So it's going to be either 80, 85. Of course, if you pick 85, Jan 17 is appropriate. If you pick 80, you probably want to go a little longer, just in case. And only add to the trade when you get a little bit of confirmation, when you see in the weekly chart that it is indeed beginning to break. So we got topping signals. These wicks are usually topping signals. They need to be followed by confirmation lines, though. Confirmation meaning that you take the lower wicks of these topping candles entirely. You cover them all together. We haven't done that yet. It might come at the end of the week. And if it does, that's going to be your signal in the short. And to add to that short, I can give you another example, but probably not in UAL. Let's look at this look right here. See here, breakout, stalling, then you see sort of a bear flag pattern, so that could be another scenario. And then this is your confirmation. A bearish engulfing that takes the low of the pattern, right? And after that, we see declines in the stock. So this is what we want to look at in UAL. So I would initiate right now, but not the whole position. Spooky did not cut Apple puts. Let's hope this was brass balls and not stupidity. Look, this is going to be, even if it works, even if Apple goes down, it's going to require you averaging down. So let's keep that in mind. You're going to have to average down. And now you kind of move from a strangle to a put situation because you already booked the profits in the strangle and the puts. You're going to use that money to average down in the puts on, or you booked the profits in the calls that you bought. You're going to use that money to average down on the puts. Which again, now we want to think about a different structure if that is the case, right? So if we get that flush down in Apple, let's say we're back below 250 again, 247, right? Then we're showing stronger signs that, yeah, it is a reversal. And maybe a confirmation will be that NVIDIA is going higher. So there's no need to pump Apple anymore. That's going to be another layer of confirmation. If you begin to see that, I would say, yes, average down to the 230 that you got, but you probably need to do something about it because honestly, right now, the 230, even for Jan 17, it's a little too far. It's going to require here a drop. To make your VIG, you need to go down by about 10% plus. Possible, yes, but usually we see that happening when a catalyst like this shows up, and the 17th doesn't cover that. So if I'm being really frank and honest with you, if this was my trade and I hold on to it, I would average down to cut loss or to exit with a tiny profit and then restructure the trade altogether. Because 230, I think, is a little too far right now. So if we go down to 247, 245, and you're close to break even, I would exit the trade and then think about another structure based on the technical pattern that we have at that time. But I would not hold and hope that we're going to do the 10% plus and take 230. That's a possibility, but I want to bet on it to be conservative. Okay, cool. That's great. We're on the same page. Palantir puts for this week worth a lotto. Palantir, you have a lot of calls, right? A lot of calls got bought with the expiration date of December 20. So, yeah, I think that, but you have to be really conservative with it. So you're probably going to go with 70, nothing more, nothing less than a 70. So if you go with the 70 puts, that's okay for this week as a lotto. Let's see what the price is. Palantir, 70 lottos. That's 44 cents. It's a little steep for the price, but again, you got a chance of profit of 14%. You require a 6.5% drop, so not the best odds here. So maybe you want to do it via a spread, by the way. 65 not going to give you a lot, so let's do the 27th here. If we do 70, 65, we're spending 90 to make 4, and that has a better degree of profitability. And then if it drops below 65, you can do something more aggressive for February or March. So this could be another way to do it. But if you want to do it for this week, like for this Friday, 70 will be okay. Palantir could move 6% in a day easy. So 70 is going to be the number that I would stop at. I decided to re-enter Microsoft puts again after confirmation of Microsoft going up again. Okay, you don't have confirmation in Microsoft. Okay, Microsoft still doesn't have confirmation. We have topping, right? So this is sort of a topping candle. If we close above, and the number here would be 456.16, then that means that Microsoft is heading higher. If we take the lows of the pattern, right? See, dig down to that support here. Let's clean up the chart so we can see it a little better. Notice what you see here, right? Resistance, 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 then a break. Retest support. So this is the chart's way to tell you this level is important. And if you break below, let's call it 445.66, that's your confirmation. That, okay, Microsoft retested, came back up, retested the highs, then we broke support. That means you need support from a lower point of view. That's going to be about 430. So you don't have your confirmation yet. You enter via an increment because you're speculating on it. Or maybe a put butterfly, that's going to be a really good structure in speculating. If it happens, it happens. And then if it breaks below the support and you get a confirmation, you can open something more aggressive. So right now, no confirmation yet, Microsoft. We're just seeing signs that it's a little too excessive in the daily chart. Okay, folks, let's see here the close. The market is done. Let's see the close. SPY, interesting close here on the SPY, 5 minutes chart. It closed above 604.14. The Qs still left that gap open, couldn't close above. The IWM is the weaker close here, 231. Big day though, big day tomorrow. How's the close in the VIX looking like? I think that the daily has plenty of momentum to go, but it topped a little bit in the hourly here, pulled back. Closing at the highs of the day in the VIX, that's always an ominous sign that you're probably going to open higher in the VIX tomorrow. So suppose we open 17 plus, you'll see the equities futures opening down. We don't want them to be down too much though, because we want them to go down too much after the FOMC. In any case, folks, let's just wrap it up right here. Appreciate you joining us for this short session before the FOMC. We'll have a bigger one tomorrow. And we'll meet you again in the daily show. Take care. Thank you. Before I go, Anton, I just saw your question. The CBOE have the skew index measures the size of the puts in the S&P. Do you have access to it? Yeah, but it also factors in the open interest data that we look at. So we'll talk about this tonight. Okay, I'm include this a little bit in tonight's show. Thank you so much, and again, once again, folks, take care of yourself. We'll be talking to each other again really soon.